if you can sort of take us through till about the beginning of November, middle of November, and then what's really started happening since then.
Yeah, this equity sell-off we're currently in the midst of really started early in October, and the spark was a rapid rise in interest rates. And then we had this rotation within the U.S. equity market where those high growth FANG type names were doing so well, and investors started to rotate out of those and more value, steady Eddie blue chip type names. And then that rotation got pretty sloppy, and it sort of devolved into just an indiscriminate global equity market sell-off. And then November was, for much of November, we kind of moving sideways, trending a bit down, and then the Fed came out, I believe it was November 28th, Jerome Powell gave a speech at the Economic Club of New York, and he hinted with his comments that the Fed may be towards the end of its rate hike cycle.
Right.
And we got a nice rally right towards the end of November. So November was actually slightly positive.
And why is the selling really picked up, the volatility picked up?
We're starting to see the first signs of what started out as just an equity market sell-off spilling into the credit markets. And credit market weakness, a lot of investors look at it as sort of the canary in the coal mine to lead you to believe that what's going on in the equity markets might actually spill into the real economy. Also, the technical factors heading into year end, a lot of folks had some losses in their taxable accounts. So definitely some tax loss harvesting, but typically when you see tax loss harvesting at the end of the year, folks will swap into a like investment. So you sell out of your equities, you buy something similar. We've seen money market assets rise pretty dramatically here. So it seems like folks are getting out of their positions to harvest losses, but just sitting in cash. Just sitting in cash.